Hello everyone, this is Harshal Desai. I welcome you all to the 5th edition of BFSI CTO Summit. We have assembled here for the panel discussion on how significant is the role of Fintechs for the future of BFSI industry. Today, in this session, we have been joined by a number of experts. I'd like to introduce them all to the audience, to our audience who are watching us live on several mediums. This session will be moderated by Mr. Nirav Choksi, who is co-founder and chief executive officer at Credible. Welcome, Mr. Choksi, to this panel discussion.
Thank you for having us.
Thank you. Our panelists for this discussion are Mr. Harshvardhan Mittal, Chief Technology Officer, Cred Avenue. Welcome, Mr. Mittal.
Thanks.
Mr. Dipesh Karki, co-founder and Chief Technology Officer, Lenden Club. Welcome, Mr. Dipesh Karki.
Hi.
And Mr. Andy Sen, Chief Technology Officer, M Pocket.
Hi, everyone. Good to have you.
I have been very fortunate to receive support from a number of experts like you in our previous session. And the conference has been an amazing one with support from a number of experts and corporate players from different sector in the 5th edition of BFSI CTO Summit, which is being organized on this virtual platform. So this panel discussion, the subject is how significant is the role of fintech for the future of BFSI industry. And with a digital first approach, not only has fintech created new and innovative ways of interacting with existing and potential customers to extend financial services, will they continue to be the game changers? With this note, I would like to leave this stage here and would request now Mr. Nirav Choksi to navigate this panel discussion. Over to you, Mr. Nirav Choksi.
Thank you, Ashant. Good afternoon, everyone, and it's an absolute pleasure to be here. I'm joined by my colleagues from the industry who are experts within the fintech space. So before we begin and talk about today's discussion, let me request each one of them to briefly introduce themselves and their companies. And let me start with myself. So my name is Nirav, and Ram and I set up Credible in March of 2017. Credible is a fintech platform that is reimagining trade flow financing by providing liquidity programs for enterprise ecosystems using state-of-the-art technology, digital KYC, ERP and bank integration, and digital documentation and transaction management. So we leverage our trade finance expertise, partnerships with leading capital providers, and technology and data analytics to be able to provide comprehensive working capital and trade flow financing solutions to leading corporates across Asia. We focus on areas like payables and receivables financing, inventory financing, global receivables, and international trade finance, securitization and debt capital markets, and of course, SME and MSME space. That being said, let me hand this over to Dipesh. And Dipesh, would you like to introduce yourself, please?
Thank you, Nirav, for giving me the opportunity. Hi, I'm Dipesh. I'm co-founder of Lenden Club, an online marketplace for peer-to-peer money lending and investments. Bhavir and I started with this idea of peer-to-peer investments in 2015, May 2015. And since then, we thought there's a huge scope in the market wherein there is a good demand of small capitals, and at the same time there are people who are looking to do alternate investment in various instruments, right? And we always felt that there is this void, that is something that P2P could definitely fulfill. The idea is not new as such, because it was quite popular in the US and in the Europe, right, with industry leaders such as Zopa, Prosper, Lending Club. So we just tried to Indianize the format. We tried to make it much simpler for the Indian customer sets, and we tried bringing more of financial inclusion by launching Lending Club in India in 2015. Initially, we started as a vanilla product and tried reaching out to the maximum people. It took us some time to build this trust in the Indian market, wherein you say that you could actually get money from someone and lend it to someone else, right? Took us time, but then we definitely got a good breakthrough there, and even got attention of the RBI, right? Got ourselves regulated, got the entire industry regulated, in fact, and became NBFC P2P platform, right? First of its kind in the Indian financial ecosystem. And eventually we started innovating further from what we were doing as a vanilla product. We started with a lot of partnerships, right? And even crossed our initial 100 crores in the month of May 2021. Post that, we've been working with a lot of partnerships with some of the industry leaders, such as Bharat Pay, Google Pay itself, right? And few others. So we keep on working with new partners in order to bring this ecosystem as a service, or as an API as a service, and a lot of other options for any partners who are looking to who are looking to leverage investments and lending opportunity.
Great. Thank you, Dipesh.
Thank you.
Andy?
Hi. Welcome, everyone, and thank you again for having me on this forum. A little bit about myself. I've been in the tech industry for about 20 years now, and I'm the CTO at Mpocket. Joined Mpocket a few years ago. So Mpocket is about 5 years old now, right? And when Gaurav Jalan, who's the CEO and founder at Mpocket, right? He realized that the youth in India, right, they did not have significant access to lending products, right? Typically, people who are above 18 but haven't started working yet, most of the banks and major financiers would not give them access to any kind of capital, right? And with that idea, we started out Mpocket. Mpocket is an instant lending app. It's fairly straightforward to use. You go to the Play Store, download, the app. Your entire KYC is digital, so there is no concept of having to submit documents or do self-attestation. Everything is done digitally, and borrowers can get instant cash loans anywhere from 500 rupees all the way to 20,000 rupees, right? So the segment is very, very ripe because there's a large population, especially in India, right, for us, where this particular segment does not have access. So for the youth, it actually became a very good platform to come in, and if you need a little bit of extra cash, do your KYC, and once you're verified, you get the money straight into your bank account or into your wallets, any kind of wallets that you have, right? And the biggest thing is, we don't ask the users to put up any kind of collateral. So, it's fairly intuitive and straightforward for the users. We are, and unlike, let's say, some of the others, we are actually NBFC licensed. And we, and it's our own capital that we use, so which gives us a significant, leg up in terms of having to deal with customers as well. So it kind of gives the confidence. So yeah, that's about Mpocket.
Interesting. Thanks, Andy. Harsh?
Yeah. Hi, everyone. Thanks for having me. I'm Harsh Mittal. I'm CTO at Third Avenue. We are institutional debt marketplace. We allow corporates to present themselves on the platform and get access to large number of investors, as well as vice versa. So investors can come onto our platform and discover large variety of corporates which are in need of debt, and that could be for various reasons. Right, so starting from simple loan to trade financing and raising primary bonds and so on. We provide a complete gamut of debt products. We started strong in the financial services space. So we started with securitization of loans and helping NBFCs to securitize their loans with larger banks, and then also ventured into co-lending space where we have a comprehensive solution, and again marketplace where financial players can come and co-lend with other larger banks. So overall, in last couple of years, we have done over 55,000 crores of lending with the help of this platform. and we not just let you discover uh, the the demand and supply, but also help manage it end to end. So starting from inception and application of the loan to managing the execution and fulfillment, and also managing the risk of the portfolio and collection compliance, we provide end to end solution in this space.
Super. Thank you, Harsh. So coming to today's discussion, and very relevant given the panel that we have today, is how significant is the role of fintechs for the future of the BFSI industry. Now, fintechs today are transforming financial services at a rapid pace. With a digital-first approach, fintechs have created a new and innovative way to serve existing and potential customers and give them access to financial services and credit. Incumbent financial institutions have realized that the value of digitization, especially in the times that we currently live in, where customers are demanding automation, technology, and speed, uh, they have to go down the digitization route or perish. So with banks realizing that and catching up with this new reality, would fintechs really continue to be game changers? And that's really our discussion for today. And let me start by asking the entire panel that what are your thoughts? How significant is it for incumbent financial institutions to partner with the new age fintechs? Is it just a trend? Is it short term, or do you see this as a relevant strategy going forward? Um, Andy, maybe you want to start.
Okay. All right. So I think you've highlighted this quite well. If you look at it, right, the traditional brick and mortar banks, due to their, I would say, size in the industry, right, and they've kind of carried on with the traditional model for decades. But recently, over the last few years, and especially in the last, I would say, 1 year, one and a half to 2 years, right, digitalization has become the key, especially if you have some of these restrictions in terms of travel, in terms of physically visiting branches. Without digitization, as you rightly said, the banks will perish. This allows them to onboard customers. In fact, if you see some of the biggest banks, the top three, a lot of their processes in terms of onboarding, in terms of customer acquisition, and the entire CRM and the customer management part has been made fully digital, right? Banks have caught on a lot. The insurance providers were already there quite a few years ago, but I believe the banks are accelerating. A lot of the banks have also gone kind of hybrid, where they do have part digitization and part physical branches. And you can typically see their executives, having smart handheld devices and signing up people at a trade fair, at offices, and so on, right? So you don't have to actually wait for the customer to come in. And that trend is only going to accelerate to full digital, because even right now in India, you have a lot of these fintechs who are 100% digital banks. Right now, obviously, because of regulatory reasons, you do need RBI licensed bank in the backend. But as far as the customer goes, there are quite a few players who are just pure digital banking, and I think that's only going to accelerate over the next few years.
No, I can't agree with you more, Andy. Great. So let's talk to Harsh. And Harsh, Trade Avenue is probably deeply rooted with several banks and NBFCs. What are your thoughts about how are they perceiving this entire new wave of partnerships that's going around?
I think, see, this is, so I agree with you guys that it has accelerated it a lot in COVID, but I see it's fundamentally like, even without COVID, it's a necessity. And the main reason is that if you look at the new age millennials, their expectations and versus what banks can provide right now, there's a huge gap between that, right? So the kind of expectations and experiences millennials are seeking, banks have a lot of catch up to do over here. There. On the other hand side, see what banks have, fintechs don't have, right? So banks have customer trust, and they have access to the capital, right? So those are the two things which fintechs don't have. So the actually the partnership is the key, right? There are many places where you'll see this. So I talked about millennial. There's also like if you go to say unbanked or people who don't have access to the credit, right? There again fintechs with the help of new type of say credit assessments and those kind of things are also helping to lend to those kind of players, right? So these partnerships are already helping. Like for example, recently we saw that Paytm Bank partnered with Soyo, their small finance bank, right,
Right.
to give the small FDs to their bank account holders. Now, if you look at this partnership, both parties are bringing their respective things, right? So the villagers will not trust Paytm. They know bank and they are willing to put their money there. But without mobile app, without like very say regional language app and so on, it's very difficult to enable and capture that market. So I think yeah, there's a lot of synergy, and other guys said, it's only going to accelerate.
Great. Dipesh? I understand, Dipesh, you are in a, your investor base do
Absolutely.
not.
So,
Sorry, go ahead.
yeah, Nirav, sorry. I think there was some network issue. Could you repeat? You saying something?
No worries. Yeah, no, I was saying that I understand your investor base probably is more retail currently, but any plans of going and partnering formally with banks and NBFCs, and what are your thoughts around that?
Absolutely. So Nirav, I mean, to your surprise, right? We have, I mean, covered almost 30% of our customer base as on today through partnerships. So
Oh, really? Wow.
that is a significant chunk of our yes, absolutely. So and just adding to Andy, right? We are one of those digital platform that is 100% digital. We don't have any physical operation as such. The entire lending and borrowing is digital at Lending Club, and our customers do not have to see who is Lending Club representative or anything anywhere, right? And as a matter of fact, there are many partners that have associated with us, right? And that provides experience to that customer, which is powered by lending. Even they don't have to do app, which was so. Of course, digital fintechs are the way ahead. Just imagine. I mean, not just with the traditional banking institution, but with any kind of technology that have evolved in the last decade, right? Be it e-commerce, right? Be it edtech, be it food tech, FMCG, right? None of those are complete without a fintech empowering it, right? So imagine you ordering from Swiggy and then doing a cash on delivery. There'll be a huge pile of cash to be managed physically. So fintech is the way, and partnerships is the way ahead, right? Even for us, right? Today there is another unicorn emerging in the Indian ecosystem that does the entire lending and borrowing through partnerships with Lending Club. So of course, partnership is the way, and that is something though we realize a little late, but then it's never too late.
Great, understood.
I think one thing which I would like to add to both Dipesh and Harsh, right? And I think Harsh has covered this beautifully when he said that the unbanked and the aspiring class, right? What we have observed is a lot of them have moved onto digital platforms because the entire supply chain has moved onto digital platforms, right? So let's say if you are paying someone digitally, right, whether that person is let's say one of the aggregator cab drivers or anyone, right, or even if you pay let's say your maid or cook digitally, they use that, they actually buy their supplies and all digitally again from the wholesale shops, right? The wholesaler again pays it digitally. It goes all the way to the mandi, all the way to the farmer, right? So because the entire supply chain has gotten the initial links of digital, and I think people are kind of enjoying it, and they're like, as long as they can retain the trust in the technology and platform, like they shouldn't have to, with cash, there's always a thing that, I have the cash, it's locked up in my trunk or, in my safe, and it's there, right? So as long as the trust is there on the platform and on the technology, I think the entire supply chain will just go digital very, very quickly in India. It'll just be like one of those,
but Harsh very rightly, Andy pointed out that banks and traditional financial institutions help create that trust. So partnerships with fintechs and incumbent financial institutions help with that trust factor. But going forward, do you see that shifting at all, Andy? Towards fintechs more or towards banks more?
So I think, I don't know, I didn't realize it was from me, but I think there will be, so the initial partnership will remain so-called truce, if you will. And it's all a function of whether the fintech wants to remain as the app and tech layer on top of the bank, or whether as an organization the fintech wants to grow and kind of capture the space, right? So we know some of the top wallet providers have very big goals and very big objectives in trying to capture different segments of the country, right? And it's always telling. For me, one of the key indicators is when you use an app or a tech platform for your banking or any other financial needs. The question is, are you backed by a bank, or have you gone and have you applied to the RBI and gotten your banking license? So that's always kind of like a leading indicator of where the fintech platform wants to go.
Well, for at least some of us on the panel today, we've tried a hybrid approach, right? So all of us, I mean, at least I believe M-Pocket, Red Avenue, and all of us are regulated entities in a sense, because all of us have some sort of an RBI license to do this. But yet, I think most balance sheets are being used as risk participants rather than being used as pure play digital lenders today. So especially in all our cases, I don't know how relevant that probably is for you, Andy, but at least I know where Harsh is concerned, or the is concerned, or where Credible is concerned. We've been starting to look at our own balance sheet more as a warehouse rather than being pure play lender. But that being said, one thing is certain, that fintechs are of course ready and open and willing to partner with banks and financial institutions. The real question is, are bankers ready? Are regulators ready? Dipesh, what are your thoughts around that?
So see, people are always resistive to change, right? Initially, if you push them an idea, they'll just simply deny or ignore it. Right? Eventually, you will have to accept it, because you may deny it. There will be 5 others that will deny, but the 6th one will always go ahead and make the change and completely jolt the entire industry, right? So I think that's the case that's happening right now with new banks. A lot of banks stepped ahead in order to provide a good banking experience to customers, right? And a lot of banks were in a state of limbo on whether to go ahead or just to step back and let them take care of it. I mean, they will not go ahead on whatsoever, right? But with that being said, I'm sure in the longer run, if somebody did not, if banks or financial institutions are not prepared to onboard technology, they will be left behind. They will be perished. That's what I see.
Okay, understood. Harish?
So I think, initially the situation was different. I think initially it looked like fintech will take over and banks will be left behind. But people are smart; they understand, right? So even there was a survey, in 2019 where even 80% of Indian bankers said that they'll be having a strategic partnership with the banks or with the fintechs, right? And we are seeing that in day out, right? So even one of the largest banks, right, we came to us saying that they need help with analyzing their housing loan portfolio, and the kind of deep big data analysis and ML techniques we had. They said there is no way for them to find that kind of trends, right, by themselves. So they came to us, they worked with us, and even the loans which we didn't help get securitized, they brought it to our platform and they said, help us find inefficiencies, right? And we found quite big, gaps and places where they could have recovered money. So, and more we are seeing this, right? So there's going to be synergy, right? So in both, especially 2 areas. One is on the customer experience and front-ending front, and secondly on the big data analytics and open architecture front, right? So we are partnering with other partners. It's going to expand what bank can do.
Understood. Yes. No, but just taking off on what you said, Harsh, and you brought up a very interesting point. And maybe Andy, you want to throw a little bit of light on this. What are the most relevant areas you think where banks and fintechs should collaborate? Is it in what kind of services would a fintech really be able to collaborate with a bank on? Besides the obvious ones, of course, we know payments is one obvious, and co-lending is another one. But where do you see this as a future from a futuristic perspective?
So I think it's always been, if you look at the bank, right, and the current breed of fintechs, it's always been in the cutting edge tech part, right? As Harsh mentioned, right now the hot areas and the buzzwords are big data. Obviously, something the size and scale of our country is huge, right? And getting a billion plus people on is no mean feat. That's the one. The second part is driving the entire data science and ML techniques, right? Given the law of large numbers, it's something which is not very easy to do on a manual or semi-manual or even on a procedural basis, which actually machine learning techniques can easily spot out, and which is something that we really do again at mPocket. And I'm sure, like Harsh mentioned, how they kind of do it for the big banks as well, right? And if you see the banking industry over the last few decades, right, that's always been the case. So if you, let's say, if you go back about 30 to 40 years, right, when banks were much more, paper ledger based, and people had passbooks and things like that, right, the banks would have partnered with the then organizations. So if you think back to the 80s, right, there were these tech organizations who helped the banks with their ledgers, with running their accounts, and the wave of computerization, as you call it, which came in, right? And
Yeah.
then the bank kind of rode on that and built on that for the next, let's say, 2 to 3 decades. And now I would say in the late 2010s and 2020s, it's the fintechs who are helping the banks with their entire big data and the data science techniques, and which I think is going to happen until the banks, as usual, will eventually, it'll happen, get a lot of the function in house, because they
No,
always do.
absolutely. No one could have said it better, Andy. You're absolutely right. I think, and more increasingly, we are seeing that too, right? We're seeing banks come to us and other fintechs and say, look, how do we completely digitize this? How do I have so much data? What can we do in terms of analyzing it to be able to enhance credit, reduce cost? Which brings again an interesting point. Do you really think that collaborating with a fintech would help lower costs, for the transaction across the board, or is it more that I don't want the operating pain of doing KYC anymore? So hey, let's get a digital fintech partnership done, which could digitize KYC. Is there a real economic benefit you see for the fintech banking partnership to work over a long term? Dipesh, maybe you want to take this to start.
Of course, Nirav. See, initially when we started Lending Club, we were doing all the KYC and verification manually, right? Through that, we observed a few things. First, efficiency. Second, accuracy, and third is the cost. Uh, you may add more and more resources in order to increase the throughput, but then in the longer run, that is not going to deliver much value, right? The rate at which your application inflows, right, at that rate you will not be able to meet the manpower forces, of course. And second, humans have sentiments, but machine don't, right, unless it's an AI. Third, of course, is the accuracy and the speed at which it delivers result, right? A human may not be able to, they have a lot of distractions, factors, right, which a machine do not have. Hence, considering all of these 3 points, of course, using right set of technology in order to do the right set of verification will definitely increase both productivity as well as economy.
Understood. Harsh, what are your thoughts around cost efficiencies and
I think, there's always a technology has a trend, right? So when you have a new technology, it will be proof of concept. The economy of scale may not be there, and it might be costly, right? But when you are able to invest in it, and we are able to significantly cut down the cost, as well as increase the efficiency. I'll give you an example. So before Third Avenue, I worked at Facebook, and we were Facebook.
Okay.
And we were working on some of the cutting edge KYC solutions, right? Now, it was very clear that some of the digital documents which we were getting, humanly, it was impossible to find the fraud, right? But with advanced ML models, we were able to figure out very easily what is the what is the real versus what is fake, right?
Right.
So many times human, which what is not possible for human eye, right, was able to do with the technology. And same way, the processing, right? So the things which were happening in matter of days would happen instantly in few seconds, right? So now if you initially to look at it, of course you need to invest a lot in building those algorithms, in even procuring that hardware and all. But when you look at scaling it to billions of people, right? And once you have made an initial cost, day-to-day operational costs come down significantly. So I was just using that as an example, saying that how technology can simplify and cut down the cost over a longer period of time. Right? Shorter period, it may look like an investment, but longer term, it will have a real definitive advantage.
But do you see financial institutions ready to pay that cost today to fintechs? Or are they realizing the real value, economic value that's being created, and are they open to sharing some of that value back with fintechs?
I think part of it is sometimes some of the use cases where the pain is more. Say, for example, now RBI is asking banks to do the real-time NPA reporting. Okay, so whether they like it or not, they need to integrate their core banking system with the in the co-lending. Say, for example, now previously when bank was saying that I'll now only do Excel, and there is no way on the world I'll open up my financial to you, right? Now saying, okay, RBI is behind my back, please help me, right?
Right.
So there are external situations which are forcing them to adopt, but once they open up, for one use case, and fintech has a foot in the door, then it becomes much more easier, and they also see the point, right? So the initiation may not happen due to the technology. It may happen due to say compliance or customer, but it quickly pivots to experience and cost.
No, and you're right. I mean, it seems to me that problems that need addressing today, which fintechs can address, come out of like you rightly said, either a customer need or a compliance need. But I think financial institutions are now moving, more towards strategic, thinking a little 3 years, 5 years, 10 years into the future, and seeing that, look, where is the consumer going? What are the limitations within our infrastructure to be able to do that, versus the nimbleness or the speed that a fintech can offer. And yet, when you try to stitch this partnership together, even though it takes some time to do it, eventually it works out, in our experience, to be super collaborative, and it works out to be beneficial to both concerned. Before we kind of summarize all our thoughts, it would be great if all of you could share one experience that you may have with partnering with financial institutions and the value it created and the process and journey. It would be great to understand what your thoughts are around that. Maybe Andy, you want to start?
Okay. I think partnering with financial institutions, we have to go back a little on our history, right? Where initially we partnered with an NBFC prior to getting our NBFC license, right? So this NBFC was more, traditional. You'd have to, a lot of it was, everything that you think about when you think of a historical and traditional NBFC, right? Lending, a lot of paperwork. A lot of dealing with branches or customers and things like that, right? So when we kind of partnered with them and we went to them not with the idea of saying that, hey, your customers are going to increase or you're this thing, but the idea that, hey, are you effectively using your capital, right? What's your return on capital? What's your return on equity, right? And then why don't you partner with us, right? And we will actually show you how much you can actually get out of the capital that you have, right? And obviously had to convince them in terms of, okay, it's going to be app, fully digital, lending based, and so on. So typically, if you look at existing NBFC, the cost, the CSC, the cost of acquiring a customer is in the few hundreds, and it's on the higher end, much higher end of it probably touches closer to 1,000 rupees, right? So anywhere, typically most NBFCs between 400 to 900, just the cost of acquiring the customer. We're not even talking about the operational cost, right? Whereas if you go fully digital, right, we can bring it close to 2 digits. Not as not quite 2 digits, but very close to 2 digits. So just on that basis itself, right? And when you're talking about acquiring lakhs of customers every month, the savings over there are just immensely huge, right? So I think for us, proving that experience gave the confidence. And as a fintech, our risk was obviously we put in the capex with our initial fundraise, etc. We had to build the platform. We had to hire the talent and put the platform out there, right? So which also speaks to your earlier point, Nirav, that where the fintechs take the capex risk in building either the platform, the tech, and then kind of partner. And once even if the initial 1 or 2 partnerships are proven, it just becomes it becomes easier for everyone else to the other partners and other banks to latch on, which for them becomes kind of a operational or OPEX model kind of thing.
Sure, and one sees that it's a for lack of better word, it's a community approach to partnerships these days with fintech. So like you rightly said, you have a few banks whose partnerships are proven, and then you have the floodgates open, and which is very very heartening to see from an ecosystem perspective that the smallest of financial institutions to the largest of banks today are extremely open to such partnerships. Harsh, you must have worked with several banks now in your stint with Credit Avenue. Any specific instance that you want to share that could be interesting?
Definitely. See, what is very relevant to the topic is the partnership of the banks and fintech and how it's helping both sides, right? So I would like to give an example of NBFC customer who basically was into the educational loan segment, right? And initially they were limited by what they could do based on their own fundraise and loan book, right? And their skill was limited by that. They came on our co-lending platform, initially partnered with one bank, right? So they did, I think, if I'm right, they did 1090, right? So 10% they were lending while 90% went to the bank. And within a few months, we saw that them scaling to sort of almost 10x customer base with this, right? So it gave them wings, right? So it gave them required capital. And then, so then they saw some issue with the, with the interest rates and other things. Then given we have an open platform, they were able to partner with other banks and bring the cost further down, right? And another interesting similar example, one guy started as a NBFC on the originator side of the co-lending, and then they decided that it's a good model. They can even fund other smaller NBFCs, right? So that's interesting example.
That's a perfect example of how these collaborations create mutual and strategic value, right? Dipesh, any experience you want to share?
Of course, Nirav. So, with the right set of technology built in-house and with the right set of integrations, right, we are able to evaluate more than 500 plus data points of customers while only taking 45 inputs from a customer, right? So this has all been feasible through proper set of integrations through various partnerships in tech, right, that have been able to provide this seamless journey during onboarding for our customers. Similar is the case when it comes to building an interaction with the customer through VoIP, building a digital footprint of our customers. Likewise, in case of delivery, right, will we have to deliver a loan product to them or any kind of services to our customer? It has completely been digitized because of the experience, because of the right set of partnerships that we have in place. So I believe this is the way ahead, and with the right set of partnerships, the experience is going to be much more enhanced for the end customers. And also this, I mean, RBI was one of the best example here, right, wherein they gave an open hand in order to go even more lenient in terms of providing video KYC and liveness check with as an alternate to an in-person verification, right? So such leniency is definitely going to increase further in future, right? We'll be able to get more digital footprints of our customers in order to get more data points and make a more informed decisions in order to evaluate our customers when it comes to providing a service.
No, sure. And it looks like, to summarize all your inputs today and all the discussion, it looks like that 2021, given, of course, the state of affairs we are in, given COVID and work from home, definitely seems like a game changer year for digitization within the financial services space. And truly fintechs, like you said, bring in that that level of sophistication and technology to be able to digitize a lot of these processes for incumbent financial players. What is also, I think, important is that it really creates mutual value. Like Harsh rightly said, that they have the capital, they have the trust of the customer, while the fintechs have the cutting edge technology and the nimbleness to move quickly. And that combination will create the next wave of credit flow and financial services to to the lowest bottom of the pyramid. Like we discussed. What I'd love you guys to do is to give a 1-minute summary on your thoughts on our discussion today before we wrap it up. Andy, do you want to start?
Yeah, so I think there are a couple of things which I believe this ecosystem will drive, right? So one of the first things, and if you think about the India stack, right? I'm sure some of you guys would have heard of the term India stack, which is a lot of our I guess some of the key tech honchos who have proposed and started with Aadhaar and everything, and the Bharat Bill Pay. So I think a lot of this will drive our the bureaucracy and the government to move into the digital age realistically, right? Aadhaar is one example which was initiated digitally, but if you look at the other ones right now, it will force, I think I would assume that it would actually force or encourage the government to move digital, right? So right now you can digitally confirm an Aadhaar, obviously with customer consent. Banks also need customer consent. You can digitally verify a PAN, right? I soon think we'll get to a stage where you can digitally verify driving licenses. I know that the Motor Vehicles Act is up for an overhaul, and I think it's just going to be a few years before this old trick of people having 3 licenses, 5 licenses, from one from each state that they've lived in. That's going to go away pretty soon, right? Driving licenses, voter ID cards, so all of these things, right? Passport, I mean, it's there. It's a question. It's a different question whether the regulators will allow access to these kind of databases. But I think for something like driving licenses and registrations, car RCs are already there. Insurance companies share data, so I think it will really bring about a big kind of data revolution, right? And there have been talks in terms of how we can get a consolidated data access, especially to financial licensed financial institutions. The mobile space, it's already there. For example, given your mobile number, there's a lot of things that can be dug up just from the telecom player, right? Again, if you're licensed enough, you'll say that how long you've had the number. So, which I think Deepesh said, right? So 45 data points from the customer. What you actually take from the customer is explicitly may not be 45 data points, right? It could be basic 5, 6 data points, name, date of birth, one ID proof, address proof, and your mobile number, like 6 or 7. But using those 6 or 7 data points, you will get your 45 data points out there, right? Sybil is a good example, and I think it will just keep growing, right? And it will kind of get. And I think as a country, I think it's really, really good because it'll just make things seamless. And what we have seen is once things become seamless, the customers will simply commit, whether it's a fintech or other products, right? It will, customers are like, okay, there is the friction of onboarding or the friction of doing things simply goes away.
Harsh?
I think, see, we are just starting. If you see the way technology pace is increasing over last 100 years, right? So, say if you look at last 90 days versus last 10 years, say last 2 years versus last 8 years, right? So the acceleration is happening in the technology very, very fast. And some of the things which we talked about are just sketching the surfaces. But there are a lot more things which are around the corner and which are there. So we talked about, say, AI and ML, means we are still sketching the surface. The possibilities are endless. We are already seeing the banks opening up to the cloud. That's simplifying. Fintech cannot live without cloud anyhow, right? So big data we spoke about, blockchain, we didn't talk about blockchain, but blockchain and crypto is becoming changing so many things. Same as IoT and chatbots and whatnot, right? So the number of technology innovations and the pace at which it is happening, along with customers' openness to adopt these new things, as well as the new reforms and regulatory changes which we are seeing, governments also being open to some of these things. Think about say directly transferring the funds to Kisan's accounts, right? Skipping all the middlemen despite of so much resistance, right? So if you combine all these things together, and then as we said that fintech plus VC money plus banks and if you look overall ecosystem, I think the situation is going to change significantly. It has already changed. Means if you look at the now how many people are doing cash payment versus if we have asked same questions 5 years back, right? So I think it has already changed, and some of the things which we are seeing in India are not seen anywhere in the world, right? So the kind of UPI payment and instant transfer without any brokerage in between, you can't see even in the developed countries. So I think in India we are going to see a lot more innovation and a lot more partnership, both in the fintech and in the financial world.
No, absolutely, Harsh. I think India is, at least from a digitization standpoint, is probably one of the leaders, world leaders in what we're trying to do. India Stack is one example, but the whole drive from the bureaucracy to move towards digitization, even from RBI's perspective, you rightly said that they've opened up. I mean, KYC being opened up is a huge step towards financial inclusion, and that is something that we were all waiting for, which is something that's become a reality now. So it is very encouraging in terms of, and it's the perfect time, right? Pretty much to leverage all of this and work with incumbent financial institutions and use and have access to that capital. Dipesh, your concluding thoughts?
Yes. So, in the last 20 years, I mean, the BFSI sector has gone through a huge overhaul, right? In the late 90s, all the big banks and the financial institutions that used to work on piles of files have been replaced by computers. I mean, despite their resistance, had to be replaced, right? A lot of people going to the banking and financial institutions in order to bypass it because they knew someone else, right in that system now has the access to do the same using the digital platform. They don't have to worry about being in a physical location just to do their regular banking, right? Or have a regular experience, right? Brands like Gucci, Prada, Versace, building those fancy wallets, they don't have to worry about those anymore because all your money is inside mobile phone, right? Everything is gone, digital. In fact, one of the big hobby that is numismatic, right? Collection of coins and all. I don't know what is going to be the case in the next 20 to 30 years.
Well, numismatics is okay. Dipesh, numismatics might be tolerable, but don't tell your wife Prada and Gucci is going out of business. I don't think that
no, they'll have to invent something digital, of course, right? So I think this is a huge change. I mean, we all remember. I'm sure we all have in our time gone to a nearby grocery shop to with a bunch of cash, counting the change and coming back home saying, okay, this much is what I purchased for what for, right? We didn't know what was the next seller going to sell it at. Right? So I mean, fintech has revolutionized the way people were doing transactions on a daily basis, right? So this is going to bring a huge change in the near future. So currently we are driving fintech. Eventually that will be driving fintech for us, right? This is what I foresee. Of course, in the next 5 to 10 years, there will be good evolutions in terms of AI, wherein smart devices like Alexa, Siri, or anything will be driving your personal finance. They will be encouraging you to do your proper standard savings. They'll be recommending you brands to purchase from. They might be doing right set of orders and everything for you. They will have a control on your finance. So I believe this is going to be a huge game changer in the near future.
Super. Guys, I think this has been the most enlightening discussion we've had in a while. So I want to really thank all of you, Andy, Dipesh, Harsh, for taking time out to do this. And thank you, Elets, for letting us do this. With that, I'd like to conclude this session. Harshal, over to you. Thank you.
Thank you so much, Mr. Nirav Choksi, co-founder and Chief Executive Officer, Credible. Thank you so much for navigating the session very well. It was indeed an interesting discussion among you all. And I hope audience watching us live must have enjoyed, must have learned, and thank you so much. So I would like to thank our panelists also, Mr. Harshvardhan Mittal, Chief Technology Officer, Cred Avenue, Mr. Dipesh Karki, co-founder and Chief Technology Officer, Lending Club, and Mr. Andy Sen, Chief Technology Officer, M-Pocket. Once again, on behalf of the BFSI, the Banking and Finance Post magazine, and Elets Technomedia Private Limited, I thank you all for participating in the 5th edition of CTO Summit. Thank you all.
Thank you, guys.
Thank you.
Thank you, Nirav, for the wonderful session, and thank you, dear panelists, for such lovely interaction.
Thank you all.